How are you, folks? Enzo DiCostanzo, clinical professor, economics and finance in St. Peter's in Jersey City. And today is the adjusted gross income lecture. So we're at the end of September, 5 weeks, right? If we can believe it, is it 5 weeks? Yeah, end of the 5th week of the semester. It feels like a long time. We have a good 5 weeks in October or so, right? Because October is about 5 weeks, 1, 2, 3, well, 4, and then 5, 6, 7. Yeah, so the bulk of the course is the next 7 weeks. And again, just to remind everybody, you got to keep watching these videos, and okay, it's required part of the course. So let's talk about our gross income. So yeah, folks, adjusted gross income, is a figure the Internal Revenue Service uses to determine the income liability for the year. It's calculated by subtracting certain adjustments from gross income, such as business expenses, student loan interest payments, other expenses. And I've mentioned this as I'm delving deeper into federal income taxes. You can see my list of documents that I've downloaded. So this is much more extensive than what's on the Blackboard site, but that's what it takes. You got to understand it to this level, and you can see what this is: dependencies, standard deviations, filing information, medical dental expenses, childcare dependency, childcare dependents and expenses, divorced, tax withholding, estimated taxes, foreign tax credit, rental income and losses, rental income and expenses losses, miscellaneous deductions, and on and on. Some of the instructions for some of the schedules, the Schedule A instruction, the 1040 instruction. So as you see, again, I say it in class all the time, that people will pay money to do this. So you want to learn how to do it, right? So after calculating taxpayers' adjusted gross income, the next step is to subtract deductions and determine the taxable income. Okay, we have a modified adjusted gross income. So again, folks are a little more comfortable with accounting. I think that services companies don't really have gross profits or gross income. That's more for the for a product company, or where there's a merchandise, like a Walmart has a gross profit or a gross income and things, gross earnings and those kinds of things. But a law firm wouldn't. And Amazon, I guess, it's part services, but again, it depends on the division. The merchandise division would, and the services division would not. So the IRS uses the adjusted gross income to determine how much income tax you owe for the year. Again, all of these documents are under the on Blackboard in the regulation folder. Okay, determine how much income tax you owe for the year. AGI is calculated by taking all of your income, your gross income, and subtracting certain adjustments to the income. So your AGI can affect the size of your tax deduction as well as your eligibility for some of the retirement plan contributions, such as Roth individual retirement accounts. Modified, I looked this up the other night. The modified, it's extensive. So I don't know if we're going to cover it in our course. It's not really a tax course, okay? But the modified adjusted gross income is the AGI with some otherwise allowable deductions added back in. For many people, these could be the same number. AGI and MAGI could be the same. And among the items subtracted from the gross income when calculating your AGI are alimony payments, educator expenses. Okay, so there's other pieces to the puzzle with this. It says, as prescribed in the United States Tax Code, the AGI is a modification of the gross income. Gross income is the sum of all the money you earned in a year, right? Which may include wages, dividends, capital gains, interest income, royalties, rental income, alimony. That's all the ways the money comes in to you, right? Interest income, capital gains, wages, some kind of salary, or other cash flows, retirement, some kind of distribution that you get. And again, as you get more sophisticated, your income will get more sophisticated. That's for sure. AGI makes certain adjustments to your gross income to reach the figure on which your tax liability will be calculated. And we do have an example. I don't think we have it today, but we have an example on tax liability, what that really is, how it's computed. I've always wondered that myself, just being an analyst, right? Just being a securities analyst. I said to myself, where does that come from? So now we know. So many U.S. states also use the AGI from federal returns to calculate how much individuals owe in state income taxes. Okay, so it's used for the state part as well. So it's the federal part and the state part. States may modify this number further with states specified deductions and credits. And again, that's the big part of our deductions and credits. Now, just to mention something, we have a bunch of filing topics where I think we covered as much as we probably should cover in maybe an introductory course like this. But there's a lot more detail that goes into married filing jointly, head of household. There's a lot more detail that goes into that, but we'll get to that. The items subtracted from your gross income to calculate your AGI are referred to as adjustments to income. Okay, and you report them on Schedule 1. So there's letter schedules, there's number schedules, and again, you really want to dissect the 1040, which is the starting tax return document. You want to start dissecting that, and then you sort of go from there. When you file your annual tax return, some of the most common adjustments are listed here with some of the separate tax forms in which a few of them are calculated. Alimony payments, educator expenses, employee business expenses for armed forces reservists, qualified performing artists, fee-based state or local government officials and employees, with impairment-related work experience. Wow. Okay, expenses, that's a lot. So that's Form 2106. Health savings account, which is important. I looked at that and said, hey, I probably have to have that. Moving expenses for members of the armed forces, self-employed simplified employee pension, savings incentive match plan for employees of small employers and qualified plans, self-employed health insurance. So, and I'll tell you, what you're going to learn from all of this is how to really break down balance sheets and income statement. That's really what you're learning here, believe it or not. Of course, you're learning how to compute taxes, but you're learning, where all the sources, where all the cash flow sources come from. Okay, which is really what this is. We have an example. We're going to run to the example in a second. Yeah, this is pretty relatively short here. Calculating the adjusted gross income. If you use software to prepare your tax return, it will calculate your AGI once you input your numbers. So if you calculate it yourself, you'll begin by tallying your reported income for the year. This might include the IRS uses income, but we use, the accountant really says that's a revenue. What comes in the doors is really a revenue, but okay, an income. So because you didn't deduct your expenses yet, right? So it's really a revenue, but so as reported to the IRS by your employer on a W-2 form, plus other income such as dividends, miscellaneous income reported on 1099. That's your self-reporting. So if you get paid like I do, if you get paid just a check or a distribution kind of a thing, then you got to report that, and you should have a contract that goes with that. Then you add taxable income from other sources, profits on the sale of property, unemployment compensation, pension, Social Security payments, anything else that hasn't been reported to the IRS. Many of these income items are also listed on the IRS Schedule 1. So yeah, do we have Schedule 1 somewhere? Just as we're talking here, let's see. One instructions. We have that. We probably should have that. Yeah, of course the IRS has it. That we know. See that, folks. You just saw what I did, right? What did I do? I typed in what I'm looking for. Right? I typed in Schedule 1 instructions, IRS, and here we are. Okay. And is this 10? Now this is sort of the the HTML version of this. We can see all the different lines and all this. It goes up to like 27 lines or something. And let's see what this does for us. Open new tab. And there's the PDF for this. You have the form, and then you have the instructions for this. And what does this thing say to tell us? It says the fiduciary of a domestic descendant's estate, trust, and bankruptcy estate files Form 1041 to report income, deductions, gains, losses of the estate or trust, the income that is either accumulated or held for future distribution or distributed currently to the beneficiaries, any income tax liability of the estate or trust, employment taxes on wages paid to the household employees. Okay, so let's look at the form, what the form looks like, which is probably not very long. That's only a couple pages. Okay, that's the form. And then the instructions, which is probably longer. Okay, that's the HTML version. We want the PDF version. Oh, yeah, that's 50. Yeah, the form is 3 pages. The instructions are 51 pages. Okay. And so welcome doing taxes for a living. All right. Let's schedule A, B, G, J. And what were we talking about here? Yeah, this says Schedule 1. All right, also listed on Schedule 1. Now we somewhere we discussed the 1040, and I just want to look and see. So what page are we on here? This is 16. So I don't think we spoke about Form 1040. Yeah, we talked about taxable income. Let's say we'll do Form 1040. Oh, great. 116 times or whatever that is. Internal, fine. Here it is, Form 1040, individual tax return. Yeah, and this should have, yeah, here's what Schedule 1 does, what Schedule 2 does, what Schedule A does. Okay, this is coming. Okay, this is coming. This is whatever it is, page 45. So just read. So we have this. This will be a future. This will be a future lecture. Something like that. Okay, that's coming. So don't be concerned about that. What a deduction is, that's coming. Okay, then tax. Okay, fine. We're good. Okay, so yeah, so we'll have Schedule 1 discussed down the road. The next step is to subtract the applicable adjustments to the income listed from above. Your reported income, the resulting figure is your adjusted gross income. To determine your taxable income, subtract either the standard deduction or your total itemized deductions from your adjusted gross income. In most cases, you can choose whichever gives you the biggest benefit. Okay, and again, it's sort of try. I know we don't love to say that, but you kind of have to try it, and that's that. A math person, or maybe I'll say it like this: maybe a non-mathematically trained person, like I was. I'm a mathematically trained person. Say we'll do an experiment with a computation, but that's the nature. That's just the nature of mathematics. And an accountant wouldn't like that, but a mathematician would say, yeah, let's try a couple of these versions and see which one gives us the lowest tax liability, the lowest taxes owed, that kind of a choice. The standard deduction for married couples is 25,100 in 2021, 25,900 in 2022. So couples who itemize deductions might exceed the amount will generally opt to itemize, while others would take the standard deduction. So again, if your verifiable deductions are bigger than 25,000, let's say, or whatever it might be, then you're probably going to itemize. The IRS provides a list of, and actually this is the problem that we're going to work out in Excel. It says the IRS provides a list of itemized deductions and the requirements for claiming them on its website. Your AGI also affects your eligibility for many of the deductions and credits available on your tax return. And generally, the lower your AGI, the more significant number of deductions and credits you'll be eligible to claim, and the more you're able to reduce your tax bill. Okay. We worked out something. We looked at something today. Oh, yeah, this thing. Give it a second, folks. Sorry. This is the Schedule A instructions for itemized deductions. There it is. 18 pages. Okay. And as you look through it, right, as you look through this thing, and again, I had this, but you could just type this in, instructions for Schedule A, itemized deductions. It says using Schedule